Hi, everybody. Chris Lamm. It is the month of September. I hope you and your family are doing okay and navigating the times we're living in well. I'm going to jump right in. One of the big questions that I'm getting a lot right now is what's going to happen when all these forbearances hit the market? And for those of you that don't remember, around 19 months ago when COVID-19 hit America and pummeled businesses and, just caused a lot of hardship for people, the CARES Act was created, and part of the CARES Act was a mortgage forbearance program. About 1.6 million people entered into this program. And over the next few months, heading in October, we're going to see the first wave of around 850,000 homeowners exiting their forbearance. A lot of people are concerned, and they should be. I get it. I mean, there's a lot of people that are not financially whole and are still struggling, and they're going to all of a sudden have to start making their house payments. And so there are some that are speculating this is somehow going to create another foreclosure wave or a housing crisis, and that's just not the case. We're going to share with you why. So for someone that's exiting their forbearance, they're basically going to have four options before they would ever have to consider a short sale or a foreclosure. And we really believe that they are going to take one of these options, and that we're going to see very few of any foreclosures actually take place. And I think you'll understand why as I jump in here. The first one is a repayment plan. Option number one is resume your monthly mortgage payments. And if you, whatever your shortfall is, or however much you have missed over the time you've been in forbearance, you make an arrangement with your lender or your servicer to pay those back on your own time as you can. And you allocate a portion of your monthly payment to covering any missed payments. So that's option number one. Option number two is a payment deferral. For those of you that have had student loans, you're probably familiar with this term. This is where you take any funds that you have not paid your servicer and you add them to the end of the loan and you pay them back when you sell your house. Or if you were to refinance and you have enough equity, you could pay it back then. But you're basically re-entering, making your normal mortgage payments, deferring anything you've missed to the end of the loan. Option number three is a loan modification. This is where the servicer may change the term of the loan. You might go from a 30-year to a 40-year. They might take a portion of your loan and spread it out over a longer period of time to bring those payments down for you. They may change the interest rate. They may even reduce the principal you owe and forgive a portion of the loan. And depending on the homeowner's situation, a loan modification is another option. And the last option, the fourth option, which is the biggest one, is that if someone is still in a place of financial hardship and getting back into a place of making their regular mortgage payments is not going to be something they can do, most people can sell their house. In 2020, we saw home values in California go up over 20% in most areas. And in 2019, it wasn't much less than that, if anything. And so for most homeowners right now, they're sitting on a ton of equity. They could hire a realtor and sell their house. And in many cases, they're going to sell their house for more than asking, and they might even get multiple offers. And so are people going to get into a position where they're going to have to lose their house? No, that's not going to happen. We really think that if anything, we may see a surge in inventory over the next 6 months to 12 months. And for any of you that have been paying attention to the housing market, you would know that that would probably be a welcomed problem to our current housing market that's been very short on inventory over the last couple years. So that's kind of our thoughts on these forbearances. If you or someone you know is in a forbearance and they have questions, feel free to give me a call. I'd be happy to talk to them, or anything else for that matter. So that's kind of what we're looking at. The last thing we want to touch on is mortgage rates. As we head into the end of the year, I know we've been talking a lot about rates going up, and they have gone up a little bit, but we're really paying close attention. We're still watching this inflation story that the Federal Reserve continues to tell us month over month is transitory, and yet it's still here. And the Federal Reserve has not done anything to change rates up or down and has continued to kind of tell us the same narrative. And so until that changes and they take a stand on inflation's a problem, we better stop and make some changes. We're probably going to see a lot of the same, which is rates kind of holding in that high 2 to low 3% range, depending on loan type and credit. Obviously, if anything changes, you'll be the first to know. If there's anything else you need from me, please feel free to reach out. Thank you all so much for the support, the continued referrals to my team and I. We're super grateful to live in such a blessed community like this. And I hope you guys are safe and staying well. Thanks.